I want to start investing, but it feels so daunting. If I only have, say, £100 or $100 to start, where do I even begin? Is it even worth it?
That is the most common question I get, and it's absolutely worth it. In fact, exactly 4 years ago, I started a real-world experiment to answer that very question. I invested £100 into 5 completely different opportunities.
You did? A real experiment? So what happened?
That's what I'm going to show you. I'm pulling back the curtain on all 5. We'll look at the learning curve, their potential to earn you passive income, the tax situation, the risk level, and most importantly, the actual results.
Okay, I'm ready. This is exactly what I need. Where do we start?
Let's kick off with the one most people think of first, individual stocks.
Right, so buying a small slice of a company I like Apple or something.
Exactly. It feels engaging, but for the learning curve, I have to rate it as high. To do it well, you can't just guess. You have to dig into their financial health, their leadership. It's a lot of research.
Wow, okay, that sounds like a full-time job. What about earning money from it without selling?
The passive income potential is good. Many companies pay dividends, which are regular cash payments to shareholders, so you can get paid just for owning the stock.
And taxes, don't they take a big chunk?
The tax efficiency can be great if you use the right accounts. In the UK, it's a stocks and shares ISA. In the US, a Roth IRA. They act like a tax-free wrapper for your profits. But the risk level, that's definitely high.
High risk. I've heard stories.
Back in the dot-com boom, I picked some winners and did well, but I also had some stocks go completely to zero. It illustrates the risk perfectly. If you pick the wrong one, you can lose everything.
Okay, the moment of truth. How did your random 100-pound stock pick do? I remember you threw a dart at a board for it.
I did. The dart landed on Samsung, and that 100 pounds investment is now worth 67 pounds and 72 pence.
Whoa, a negative 32% return? So it really is a gamble.
It highlights the hit or miss nature perfectly, but listen to this. If that dart had landed on Nvidia, that 100 pounds would now be worth an astounding 980 pounds.
980 pounds, that's insane. But you're right, you can't rely on luck.
Exactly. Which is why I always recommend beginners practice first. A platform like Trading 212 has a demo account where you can use virtual money. Full disclosure, the content provided in this video is for educational and informational purposes only. The ideas and strategies discussed are based on personal experience, historical analysis, and general financial principles. This video is not financial advice, not legal advice, and not tax advice. Investing in the stock market involves risk, including the potential loss of principal. Past performance is not indicative of future results. The creators of this video are not licensed financial advisors. You should always conduct your own thorough research and consult with a qualified financial professional before making any investment decisions. Any action you take based on the information in this video is done strictly at your own risk. Finally, any mention of specific companies, stocks, or platforms is for illustrative purposes only. It does not constitute an endorsement or a recommendation.
Okay, so individual stocks are high risk, high reward. What's next on the list?
Next up is a REIT, or Real Estate Investment Trust.
A REIT? That sounds complicated.
It's actually pretty simple. Imagine 1,000 of us each put in 100 pounds to buy a big office building. We all share the rental income. That's a REIT. It lets you invest in huge properties without needing to buy them yourself.
Okay, it's like crowdfunding for shopping malls and hotels. I get it. So, what's the passive income like?
Excellent. REITs are legally required to pay out most of their income as dividends, so if the properties are rented, you get a consistent stream of cash.
I like the sound of that. Less risky than one stock, I assume?
I'd say medium risk. You're diversified across many properties, but if the whole real estate market dips, it can still lose value. So how did my 100 pounds do?
Tell me.
The investment itself is currently worth 98 pounds, 59 pounds, a tiny loss. However, over the 4 years, it paid me 11 pounds, 93 pence in dividends. So the total value is actually 110 pounds, 52 pence.
Okay, so not a huge win, but it didn't lose money, and it paid me along the way. That feels pretty solid and stable.
Exactly. Now for something less stable. Number 3, cryptocurrency.
Ah, the Wild West. Bitcoin. I hear the stories of people getting rich overnight.
And stories of people losing everything. It's why I call it a blend of investment and high-stakes speculation. The learning curve is moderate, but the risk is very high.
I bet. and I've heard you can get hacked and lose it all.
It's a huge risk, which is why I personally just hold my crypto on a secure hardware wallet and don't engage in the complex lending or staking stuff. The tax situation is also pretty poor with very few protections.
Okay, so the big one. Your 100 pounds in Bitcoin. What's it worth today?
That £100 investment is now worth an incredible £652 24 pence.
Wait, what? A 552% return? From 100 quid? That is unbelievable.
But Ben, and this is critical, that is absolutely not typical or guaranteed. The risk is immense. For every Bitcoin, there are thousands of coins that have gone to zero. You have to be prepared to lose it all.
My 100-pound investment in an S&P 500 index fund is now valued at 179 pounds 53 pence. Wow, almost an 80% return. Less than crypto, but with way less stress and risk. I can see why that's the core of your strategy. It's why it's recommended for the vast majority of investors. Simple, low cost, and a proven track record. The biggest lesson from all this, Ben, is the power of starting. Even 100 pounds can grow into something significant, because time is your greatest ally. This has been incredible, Alex. I feel like I finally have a real map. I'm not scared to start anymore. I'm actually excited. That's the goal. Now, if you're ready for the next step, I've got another video on a different online strategy. But hey, before you go, I know. Subscribe to the channel. Already done. Now send me that link.